I'm curious, a lot of the discussion today really focused on how she's doing at her job and whether she will be back, whether she's going to serve another term. How do you assess her performance? And from your perspective, do you think she deserves to get another re-up again at the Fed?
Well, there really hasn't been too many changes of policy on her part since you've had a new administration come in. I can't speak for the nature of the conversations that she's having directly with the administration and what her vision would be in 2018 and beyond if she was to stay on. But I think the committee members asking her what her plans are, what her asks might be, and her answers were all very telling, just to kind of feel it out and see what she's thinking and what her interests might be. If I had to guess, I would say that in 2018 there would be a new chair that would come in, but who knows? We'll see. As far as some of the items that were discussed, you have a lot of members of the House Financial Services Committee eager to see the multi-trillion-dollar balance sheet be wound down, to be cleaned up, to be investing in Treasury bonds and not some of these other assets. So from that standpoint, a lot of good news. You have a lot of members happy with. We'd like to see our economy grow. And also, I think from a monetary policy versus regulatory policy standpoint, there were a lot of questions of the chair where the board, the Fed will get a little active in a corporate board. And the point about liability, where the board members are liable to shareholders, and there's civil and criminal penalties if they are not following certain laws and doing the right thing for shareholders, versus when the Fed comes in their supervisory role, you don't have that same kind of a liability and accountability. So that too was an important focus today.